Warm greetings to you, accountants. I think this is another presentation. I hope I found you well. Let's get to today's business. This is a segment where I'm presenting on accounting. And today I want you to get your pen and your paper, and we want to cover this aspect on capital expenditure and revenue expenditure. Okay, so our focus today is capital expenditure, understanding capital expenditure and revenue expenditure. I hope it's loud and clear. I hope you have your pen now and your paper so that we can kickstart. So this is our presentation today, and we need to work together and understand this. Okay, our focus is understanding capital and revenue expenditure. Remember what we do in accounting. We need to understand the activities that drain or that pumps, the activities that pump money out of the business. And these activities are usually expenses, okay? They are our expenses. So most of the time, these expenses, they come maybe in different forms or in different versions. So we need to understand or we need to be in a position to define whether this expense is a capital expense or the other expense is a revenue expense. Okay. On our focus, our success criteria or our milestones, we need to start with the first aspect, which is C to B. We need to be in a position to define capital expenditure and revenue expenditure. Then after that, we need also to move on to classification of this expenditure into capital expenditure and revenue expenditure. Then the last aspect, we need also to explain the effect of wrong classification of capital expenditure to the income statement and to the statement of financial position. Okay, I think that one is very clear. Let's kickstart maybe on our notes. Okay, so we are going to start with capital expenditure. I'm expecting you to come up with some definitions. What do you think is capital expenditure? Okay, I'll give you 1 minute to ponder on the question, to try to come up with an answer. Okay, yeah, different contributions are coming from the background. I can hear the answers. All right, that's fine. Capital expenditure. I have the definition from here. Capital expenditure is an expense incurred by the business in the acquisition. I think that the key term there is acquisition. In the acquisition. So if you acquire an asset, that expense that you incur in that acquisition, we call it capital expenditure. It can also be an expense that is incurred in adding value to the existing asset. Let's say you have got your house, right? It's an existing asset, but you want to add value to it, maybe putting air cons, maybe adding more security, maybe your CCTVs and so on. If you're adding value to that fixed asset, that expense, we can call it capital expenditure. Let's say also you've acquired a motor vehicle from South Africa, and then you are supposed to maybe to register that car under the laws of Zimbabwe. The expense that you incur in acquiring that asset, we call it capital expenditure. So someone might get to wonder, why do we need to classify these expenses as either capital expenditure or revenue expenditure? You know, they have got an impact on the profit. They have an impact on the value of the asset. For example, let's say you're extending your building. Your building was worth 1 million, and the new extension cost, the cost of new extension, let's say it's 500,000. Okay, so it means your building, if the extension cost is a capital expenditure, it means it adds value to the fixed asset. For example, the fixed asset will be now 2.5 million. Okay, so it's very critical as an accountant to know whether this is in a capital expenditure or a revenue expenditure. So by definition, we say capital expenditure is any expense that is incurred by the business in acquiring the asset, adding value to the existing asset, or any legal cost of buying a new asset. All those we call capital expenditure. Let me get to an activity. It should be two-way traffic where you participate, and as I give guidance to you. Activity: list any two examples of capital expenditure, 2 marks. Okay, this is one of the favorite of examiners. You need to be in a position to list examples from the definition. Can you try to come up with examples of capital expenditure? I'll give you 1 minute to take this one. All right. Let me give you the solution. I think you need to compare your answer with my answer. Example of capital expenditure: legal cost of buying an asset. Okay, it's a capital expenditure. Carriage cost of a new asset. Let's say you are ferrying your motor vehicle from Bay Bridge to Zimbabwe, maybe to Harare. All right, that cost that you incur in carrying that asset, that new asset to Harare, is also classified as capital expenditure. Let's move on to the other aspect. This is revenue expenditure. Okay, by definition, revenue expenditure are expenses incurred on the day-to-day running of the business. We are saying all the expenses that you incur on daily basis, expenses such as payment of electricity, payment of salaries, payment of insurance, all these expenses, we classify them as revenue expense. All these activities that are incurred on day-to-day basis, they are classified as revenue expense, or any expense which is not capital expenditure is revenue expenditure. This can be a very tricky definition because you might fail to decide whether this is a capital expenditure, but that's how you go about it. Okay, revenue expenditure, these are expenses that you incur on day-to-day running of the business. Let's get to an activity which can also help to reinforce the idea or the concept of revenue expenditure. These two revenue expense. Okay, revenue expenditure. I'll give you 1 minute. You can pause the video, then we start from there. Okay, I have my solution. Repairs on a motor van. It's a day-to-day, you can repair a motor van on a daily basis. Repainting of a new building, right? This can be tricky. We are repainting. If this is repainting, then it becomes what? Revenue expenditure. Repainting, it's reworking. We are reworking. It's more of we are reworking on this one. Repainting, irregardless that this is a new building, but this we are painting it for the second time, so it qualifies to be revenue expense. Okay, we need also to move to this new aspect, which is favored again with the examiners, particularly those taking Cambridge. We have got what we call joint expense. Let me give you an example of a joint expense. A joint expense, let's say, for example, in your trial balance, you find an expense. That is written in your trial balance. Let's say $10,000. 10,000 what? How much this one? $10,000, right? Right. This $10,000 is indicated as salaries in your trial balance, but there is an additional note that says 1/4 was incurred in repairing the building. 1/4 was incurred in repairing the building, and the remainder, I think this 3/4, okay, was incurred for paying for staff paid to extend the building. So this expense that was for extension, right? This was an expense for extension. They were extending the building. So this expense is in two versions. This 10,000 need to be divided. This is what we call joint expenditure. You need to divide it into two. That is capital expenditure and revenue expenditure. 1/4 was incurred in repairing the building. So it means 1/4, we say 10,000, right? 10,000 divided by 4, we get 2,500. This is 1/4. This 2,500 is revenue expenditure, and this is revenue expenditure should be recorded in the income statement under expenses. So under expense, we are supposed to record 2,500. All right. Then we are supposed also then to move on to another section or another portion of this same 10,000. 3/4, we divide this 10,000. 10,000 divided by 4 multiplied by 3, 7,500 becomes a capital expenditure. But how do you treat this capital expenditure? That's the bigger question that you might have here. 7,500 is a capital expenditure, and capital expenditure are not, remember that capital expenditure are not recorded in the income statement. They are recorded in the statement of financial position. So you go to your SFP, your balance sheet, there will be a value for the building there. Then you are supposed to add this extension. This 7,500 is an extension. So you are supposed to add to the value of the fixed asset. Then you get the new value for the land and building, which is X plus $7,500. Okay. I hope you are actually following. I'll give you an activity, and you know our main textbook that we are using. You get to activity 24.1. On that activity, I want you to try and categorize revenue expenditure and capital expenditure. So I want you to keep on practicing this, and by the end of the day, I know you'll be good to go. This is one of the favorite topics that the examiners will bring in the exam. Remember to subscribe to our channel. I wish you all the best in your exam. Bye-bye for now. Thank you. Okay, so we'll meet in our next lesson. We are done for today. Thank you so much. Thank you so much. We need to stop here. To stop.